We all know that when it comes to price in cryptocurrency or any other market never moves all the way steadily to the upside without seeing any decline at all, or all the way steadily on a decline without seeing a rise at all. Instead, what we see is that when prices are moving, especially in the primary trend, we see it move in the form of a thrust, right? Like a swing. It's always followed by a reaction, like a pullback in the opposite direction before yet another swing or a thrust or a sharp higher thrust or a higher move is made. Each thrust is called a swing. Now, when a move is measured from the bottom of the move to the top of the move, it is known as swing high. Now, the top of the move is the swing high. Now, if we were to measure from the top of the move to the bottom of the move, now that is known as swing low. So each reaction after a swing forces the price to retrace back part of the move of the swing created by the swing, corrected to the downside. This phenomenon is what is known as pullback, or you can call it retracement. But when the retracement is greater than the swing or move, we believe that the primary trend has changed, or at least is near term changing. To use retracement theory, first we have to determine the primary trend, the primary direction that the price is moving. But once we are able to find the primary direction, whether it's uptrend or downtrend, the next key is to know how far a swing retrace would be before the market resumes the primary trend. By knowing this, we can have a better judgment what is the best point to enter the market on that reaction. The truth remains that timing entries on reaction is probably the most important aspect of trading. Patience and timing and understanding retracement theory can help us to correctly judge the uptrend or the primary trend, but also can help us find the correct time for entry on these reactions. But what can we call a normal retracement and what can we call a reversal? A question that still puzzles most of the traders today. One school of thought I will tell you believes that normal reaction tends to capture or a retrace like about 1/3 or 2/3 of the previous swing in the primary trend direction, while another school of thought believe that sometimes you're going to get about 40 to 60% retracement. Now that's still a normal retracement for this school of thought, right? But one that seems commonly agreed among all of them is that the 50% retracement is the most likely. Now this is going to be found among Fibonacci retracement users. Students of the Elliott wave theory seems to consider the Fibonacci retracement tool very valuable in this subject. It is believed that Fibonacci retracement level of 0.618 and 0.382 to be the most critical of all the levels when it comes to retracement, and I personally do believe that especially the 0.618 is a very important level in terms of retracement after a big swing or after any swing. On countless occasions, I have seen market prices retrieve on this level. In addition to this retracement theory, there are other ways we can use to judge and have a clue of how far a pullback can go or a reaction can go before yet another rally. Now, in an uptrend, we talk about pullbacks, we talk about retracement. In a downtrend, we talk about rallies or a pull-up. So we have a clear difference. In an uptrend market, you will be experiencing what is known as pullbacks or retracements. Meanwhile, in a downtrend market, this is known as pull-ups or rallies. In addition to the retracement theory, there are other ways we can use to judge to get a clue if a reaction or a rally is coming to an end, and to help us to determine what is the right time that the trend will resume for us to enter our trade, to help us determine when the primary trend will resume, such as support and resistance. So this takes us down to understand what is the support and resistance theory and how can it help us understand retracement. Support levels. When we talk about support levels, we're talking about the price areas on your chart or price levels where significant demand buyers exist. They are waiting enough to at least cause a temporary pause in the dump or declining of price or a downward movement of price. Resistance level are price levels on your chart which exists significant supply or sellers are waiting, and these sellers are capable of causing a pause temporarily or a halt in the advancing of price to the upside. The theory of support and resistance states that in an uptrend, each former top, once surpassed, automatically becomes a new support, and in a downtrend, each former bottom or low, once penetrated, becomes a resistance level. A trading range tend to create an even formidable support and resistance, strong support and resistance, since actually enough trading took place in that level. Because we said consolidations are areas on your chart where there is enough exchange of hands in terms of buying and selling. There is an equilibrium between buyers and sellers. There is a little drag in between the two. Support and resistance theory also states that once a support is broken, it becomes a resistance, and once a resistance is broken, it becomes a support. When a support or resistance gets hit multiple times, just know that that support or resistance gets weaker with each hit. Once a support or a resistance level has been attacked too many times, it is weakened. It might resist like 2 to 3, at worst 4 hits, but by the 5th to 6th hit, it will go down. In fact, some don't even make it beyond the 3rd hit. It depends on how strong the support is. In the future video, you are going to be able to see how you can use this pullback as advantage, because this pullback tend to form what is known as temporary consolidations, and this temporary consolidation, their equilibrium between buyers and sellers, like I said, tend to become formidable support and resistance, and this are opportunities for new trades to be taken. In the future videos, of course, you're going to be able to see the patterns, different consolidation patterns, and how to trade them, how to use these pullbacks to get into a trade successfully on time.
I always fought just to wear the crown. I'm pissed off at these fucking clowns who were all taught they deserve an ounce. It's only worth it if you work for it. It's only worth it if you work for it. I won't stop till they hear